Hello and welcome. Thank you for joining us for another episode of Beyond the Blueprints. I'm your host, Jason Smith. In this podcast, we explore all things new home construction across the Triad and interview all kinds of industry professionals. This morning, we're filming on location in Winston-Salem at the design studio of Eisenhower Homes. We'd like to thank Eisenhower Homes, Todd Eisenhower and his team for allowing us to be here today. And today we're joined by Gary Cagle, Fidelity Bank. Nice to see you.
Yes.
So Gary, tell us a little bit about yourself, kind of your background, your history. I know you've got a long history in the businose.
Yeah, Jason. Yeah, thanks for having me, and good to be here with you today, and share what I can to those out there that might be interested in the construction area. So I'm market executive with Fidelity Bank here in the Winston-Salem Clemens area. I've been with Fidelity Bank for 20 years, and started down in the Raleigh area with the bank, and all really on the commercial side, which includes some residential construction as well. As we kind of include that in a lot of areas. So right. So I have been in the Raleigh area for about 5 years, and then here in the Winston-Salem area for the last 15, 16 years here in Winston-Salem.
Are you a native of Winston-Salem?
I grew up down in Lexington.
Okay.
Grew up just down the road, about 45 minutes from here, down in Lexington, and lived all my life kind of in this, since high school and college. Been in this Winston-Salem area. Went to school here at Wake Forest.
Yeah. We were just talking off air about the Deacons. So. Great school, great history, so that's cool. So we're going to talk today about builder financing and options and what consumers and builders kind of look at on a day-to-day basis. So one of the first questions I want to talk about is if a buyer, you're looking for a custom home and you find something in a new construction neighborhood, and what's the process look like on your end? A buyer comes to you and says, "Hey, I found a home. Now what do I need to do?"
Yeah. So
let's say this: I found a home site.
Home site. Okay. Yes.
Yeah. Let's start there first.
Custom construction. So on custom construction, the most important thing is having a great connection with a good quality builder.
Yes.
That's going to help in that process. And in my experience. Having a good quality builder that has a lot of experience in the market and knows how to take a house from start to finish makes a huge difference in making that process go smoothly. And so, if somebody comes to me and say, "Hey, I found some land. I'm thinking about building something. What should I do?" I'll certainly talk them through how the financing side of it works and those types of things, and talk through the different scenarios. But the first step is really finding a good builder that can help through that process, help understand what costs are going to look like, what time frames look like, and just really helping to bring that idea that this potential person may have to kind of bring it to life.
So one of the questions I get asked, I do a lot of new construction on the custom side. So the first thing we get asked is, what kind of money are we looking at to put down for let's just call it a construction to perm loan or a CP loan?
Yeah. So there are a lot of different programs, and it really can vary a lot.
Okay.
So there are some different programs that can minimize that down payment as much as possible, but generally custom construction generally does have a little bit more down payment requirements than non-custom construction.
So on the builder side, typically a builder wants, if you're a consumer out there and you're looking to purchase and you're going to build, I know a lot of builders are going to want a certain amount of deposit because in order to keep money in front of them, because it's a dangerous process if you're a builder and you're fronting the money and not the bank fronting the money. Yes. It can catch a builder in a bad place or a consumer. But so one of the things that you have to think about is is what the builder has to purchase on the front end in order to keep your home moving in a timely process. So one of the first things I typically hear people say is the builders have to have enough money to do certain things, but especially windows and doors and things that they've got to be ordered well in advance. So a lot of times some of this deposit is asked to be, a higher deposit so that they have enough to start that process and make those orders in order to, when they get to it, the windows are waiting on them. They're not waiting on the windows. Just that's one example, but do you see stuff like that?
Yes, definitely see that. And there are, different builders will have different ways they handle from a deposit standpoint. Some builders, want a certain amount up front. Some want it kind of in stages as far as some deposits go. That can really be builder. It can vary from builder to builder, and it makes sense because there are, as you mentioned, there are costs up front that the builder is having to front as they go into that project. On the other hand, though, just be careful when you're looking at a builder. There are some builders who may be very very tight on their liquidity and we've certainly seen situations where they're using the money, that deposit money goes to some other projects or things like that they're funding where they're
I'm
so
sure
just be sure
you, the bank, monitor. When I say you, the bank,
yes.
I mean the banking industry, not you specifically, but the bank usually monitors or tries to monitor that kind of stuff as best they can.
And so just be sure to understand who the builder you're working with is, and it helps to have some experience and go. Maybe even go see a couple of the homes that they've built, just to kind of see what see what they look like, see how those processes are coming, and talk to some other buyers that have worked with that builder before, and just get some feedback back from them instead of kind of going in again and without an idea. Yeah.
Let's explain if we're talking to the consumer out here, let's explain to them in very simple terms, what is a construction to perm loan? Yeah.
So a construction to perm loan is basically a loan where the construction it finances the construction of the property, and then can automatically convert if we're talking kind of a one-time construction to perm loan, which I think is kind of what you're referencing here. It can automatically convert into that permanent financing, which is your permanent mortgage that you keep for 15, 30 years or whatever that time period is. And then typically during those construction periods, the loan is funded as progress is made on the construction of the house. And so from day one, there is very little debt. Maybe bought some land, and that was kind of included in that project there from the beginning. So there's some, so you're paying interest on that debt that's out there. But as the construction moves along, draws are made, and so the bank will go out there and do draws and kind of fund those as those go along, so that at the end of the project, the loan kind of ramps up to its final stage when it gets to be completed.
So let's see. One of the questions I wanted to ask is, and we're gonna be asking Gary questions today, and just for clarity purposes, we're talking industry generalities, not his bank specifically, unless he wants to mention something that's specific to their bank. But we're generally just talking about the market as a whole and what's the norms might be. So when we answer some of these questions, I mean, if there are specific questions you have, you can certainly reach out to any of us, and we'll help get you some answers. But we are going to be talking more in general terms of how things operate.
And some of the terms and those types of things change pretty regularly too.
Yeah.
And so
So if a buyer, I've done so many different ways. There's a million ways to skin the cat, so to speak. But if you're a buyer and you want to do a CP loan, builders typically like to do the CP loans for a couple reasons. One, it typically doesn't tie up their lines of credit, so they can continue to go out and build specs or do other projects. Maybe they're purchasing more home sites, whatever that may look like. But what are benefits to a consumer maybe and a builder? Maybe that's a double-edged question. You can answer, first the consumer, then the builder. But what are benefits of each side of the transaction for doing a CP loan versus maybe something more conventional?
Yeah. So if you're looking at from a consumer wanting to build a house versus buying an existing house, the major benefit there is that they get to build what they want to build, and there's a lot of customization that can happen in that. If you're buying a spec house that's sitting out there available, you can get it right now, but your customization of it is fairly minimal, and even there are certainly builders that'll help you customize some of that, but depending on your circumstances and kind of how particular you are about wanting things, having a fully being able to customize it completely can be a big benefit. Now, when you kind of go through that process, you always have to think about the other side of that, which is will it appraise for a value? If you're sometimes you can get into kind of doing so much customization. We've seen a lot on the kind of lending side where there's a lot of customization done on a home, and then the appraiser can't really give you credit for every value for all the things that have been done, because from a square footage standpoint, you're just kind of out of market.
What do you do in that situation? Because I know that actually happens a lot. So so let's say you're in that situation. What are your options? Does the buyer pay the difference out of pocket to make up the balance, or what are the options?
Yeah, so in our situation, we go back to that buyer, and we kind of explain the situation. We help them look at the appraisal, look at what it may show, and kind of leave it up to them to kind of make that decision. One option being going back and saying, to your builder, to your architect and team, and saying, hey, well, let's cut something out here. Let's change something here. Let's do something different that'll help improve that appraised value. Is there a way to go into the builder and say, is there a way to kind of cut some costs? Maybe take out some of the upgrades that were in that house. The other option being, we see some situations where people they may just want what you want, and if you're willing to kind of pay the extra cash to make that happen, that's okay. And we can only loan based on the appraised value. So our loan may not be able to fund the full amount that we had hoped to fund in that particular situation, but sometimes the homeowner, the home builders,
so
okay.
What if a buyer is building a basement home? Does that affect the loan? I mean, because I know from an appraisal perspective, basements are below grade, and do y'all value? Does the bank look at the value of a basement versus
Yeah, so
does that play into,
it definitely does. It plays in on the appraisal side, and we see that a lot on the appraisal side. And as I think we all know that the appraisers are they're third party. They are not in any way connected to the bank as far as we're completely independent. And so what the appraiser says is what we have to go on there. And so when but we do see it is fairly common to see that basement where whether it's if there's a large portion of the home that is a finished basement, sometimes that can cause some issues on an appraisal. Some appraisers are able to find some comps of other ones that are similar like that, and sometimes that below grade finished basement can have an impact. And so we've certainly seen situations where maybe we had an one where the basement had caused an issue like that, and went back and decided, well, we're not going to finish that base portion of that basement. We're not going to finish it quite yet. It cut out some costs. The appraisal really wasn't affected that much because there wasn't that much value given to it anyway. And they said, well, we won't finish it maybe in a year or two. We'll go back and finish that portion where they don't have to do that yet.
So on the custom side, the reason I brought up the question is nowadays we see people finishing basements in many different ways for in-laws, children, grown children moving back home, whatever, and they're putting in full kitchens, they're putting in laundries, bath. So it's almost in some cases people create almost like a an apartment or some kind of smaller living dwelling area in the home, within the home, and and I hear the builder side a lot. So from a builder's perspective, a kitchen and bath costs the same whether it's in a basement or on the first floor, and so and we struggle sometimes, not all. Again, it's a healthy struggle, but we struggle with appraisers and banks and builders to try to mesh all that together to where at the end of the day the loan happens, the buyer gets the property, everybody's where they need to be, but we do find there is some struggle there, and that's just real in our world when we start doing basements and lending on things that are basements. So one of the other questions I had today was, let's say a buyer catches a home that's partially finished or at some stage in the process of construction. What are their lending options at that point? Obviously, conventional type loans. Can they still do a CP loan if they catch a home under construction?
Yes, yeah, they can. Yeah, so the important part is about it places even more of an emphasis. There's always an emphasis, but even more so on understanding what that project is going to involve, and which means having a builder really get in there and understanding all the costs that are going to be involved in getting that from point A to point B, because there are as you know, and there are a lot more unknowns when you go into a house that is where you're renovating or adding on or doing something major like that, but is existing versus starting from ground up.
One of the things we do with I work, at any given time I may have 20 to 40 custom builders, but one of the things over the years that I've learned, and it took a while, but I feel like we've got it down now pretty good, is that we get all of our builders to create a specification sheet at the time of construction, and we go through, and it's a spreadsheet, and it'll go through room by room and say, secondary bedrooms, what the crown is, what the base is, what the floors are, and we go room by room by room, and basically we attach that to the contract, and the banks like it. The reason I bring that up is because then, they know if they're getting it appraised at some point, they can see what's going in the home, how to value the home, and the buyers and sellers know what's going in the home. So there's no funny business, not that there should be, but everything's in writing, everything's clear, and we've always found that to be helpful and important to both sides of the transaction.
Right, and more often on those types of projects, we look at that budget from the builder, and then we look at maybe including some type of contingency in there.
Yes.
So for some overruns and some things that come up, and so we would build some additional contingency budget, and then that does mean that if you think about it, that contingency budget adds to cost, which means the appraisal does have to appraise for a little bit more to keep those numbers in line. But if you look at, say, just throwing out an example, a 10% contingency, that something like having something like that in there helps from a lending standpoint and from a buyer standpoint to be able to have some cushion, because more likely than not, there's going to be something that has a cost overrun on those renovation jobs.
Yeah, exactly. And we so what we watch these volume builders. Man, are they smart, and they've got all this stuff down to a science. I mean, we're sitting today in Eisenhower Home Studio, and we were just talking off air. I think maybe Day and I were talking, and these people come in here and they can walk through the studio and pick out their entire home in a couple hours, and we were just talking about how for a builder like Eisenhower, how it just speeds up the process, because now this information gets fed to the field, they get orders, and I mean the speed of the building process is just drastically improved, which to everybody, buyer, seller, time is money, and so we've tried to bring that to our custom builders, because I find custom builders are the builder in their truck, and they're smart, they build amazing stuff, but you know, a lot of times they need help with those types of things, and so we've tried to, you know, bring that as, you know, to our team of builders, so that that's a tool and something we offer them that you know, that they need drastically, and I'm sure that's across the board. So anyway, that's one thing. The other thing I want to talk about is on a CP loan, because that's what most people are doing on the custom side. One of the benefits is they can lock in at today's interest rates. Maybe that's a good thing. Maybe it's not. But usually, and you can tell me, generally a lot of banks have what they call a one-time float down somewhere during that process. If rates drop, they might can take advantage of that and catch a rate drop. Talk to us about that.
Yeah, so there are a lot of different options out there, and banks, they vary from time to time what they offer and don't offer, as far as you know, one-time close, two-time close, as far as you know, being able to drop down interest rates in that process. So you know, talking through kind of a, you know, one-time close type loan, you know, you are, you know, looking to, you know, kind of locking in a rate on that front end, like as you mentioned, some banks do offer an option to be able to kind of drop that down over time. You know, in a declining rate environment, if this is one, you know, then does that mean that, you know, that you know, there's maybe you should wait and lock that in later, or is it better to go ahead and lock it and then, you know, take advantage of that one-time
Always
drop?
a $1 million question.
There's always just so many variables, and so and then as rates, especially last year, kind of industry wide, it seemed like the two-time close became more popular, or fairly popular as well, actually, because of not locking in that rate, knowing those rates are going to go down. So we saw, you know, just industry wide, some of that kind of taking place. So, you know, I think the important thing is finding a banker and you know, some folks, a team that can really help explain the options and understand the options. So so you're not getting into something and then later, you know, 6 months down the road rates change and you don't know what you can and can't do. And so just understanding those options, because it can be confusing for somebody who's especially not done it before, and does not borrow money. You know, a lot of times the, you know, custom home buyers, so some are, you know, in businesses and, you know, are regularly borrowing money, but some, you know, the only time they've ever borrowed money was when they bought a home in the past, and now they're ready to kind of build one, and so they hadn't had a whole lot of experience doing that, and so, which is perfectly fine. But it's just important to find somebody you trust to kind of sit down and have a conversation with.
So is there benefits to the consumer on the tax side? I hear people sometimes say, "Oh, well, you know, the consumer or the individuals getting the loan can take the interest." I guess it may be right. Is that tax deductible?
So I'll refrain from not being a CPA. I would encourage you to talk to your accountant. Speak to your accountant. That is a very good.
But you get that question. I mean, I get it a lot.
That is a good question, and I you know, and there are some variables that are to consider, but it really does depend on the individual's personal situation. So I'd say, you know, talk to your accountant about that. But that is something to consider for sure.
Yeah, certainly. Yeah. The reason I bring it up is a lot of times when buyers are talking to builders, you know, is the builder carrying the loan? Is the buyer doing this construction loan? Because if the builder's carrying the loan, then they're going to work in interest in their figures. So I mean, it's math, not magic, and so, you know, it's all of how you do the math. And,
that's
it's a
right.
question
If you're carrying the loan, you are the borrower. You do. Yes. You do get the, you know, the interest, the information, you know, the interest is your interest that you are paying, which is,
so
I think,
advice,
your question.
If you're in the market and you're looking at a construction to perm loan option, you know, you may want to consult your accountant and look at those, or what are the ramifications that may benefit you or not. So we're going to close today on something maybe a little, maybe fun, I hope. I don't know, but what crystal ball? Yeah. What do you see for 2025?
Yeah. So 2025 will be, I think it's really going to be an interesting year. So I think the, heading into last year, I think there was some, there were a lot of question marks in a, declining rate environment about kind of where things were headed, and then it being an election year. Election years are just always a little bit volatile. People are kind of hesitant to do things, and I've seen that kind of rolling into the beginning of this year. There's been a lot more conversations about ready to kind of go on some projects, and there's still if you look at the market out there, there's there is some inventory, but there's still very, very strong demand out there now too in the construction world. I think I'm hopeful that from an inflation standpoint, things have settled down a little bit and can help those and I'm talking particularly in this custom construction world. It was a very difficult time to try to build something when costs were rising. And it's taking 12 months to build something, and by the time you got it built, your costs were up here, and that made it really difficult. Hopefully, that some of that is going to be pretty stable this year. And so, going into those projects, if you're going into the project, you'll be able to feel comfortable that your costs today are going to be within reason of kind of where they're going to be at the end of this project.
Yeah, I mean, so you probably get asked more than I do, but I mean, we're all being asked in our industry in general. What are rates going to do? They pretty much have maintained. They've dropped a little, come up a little, come down. I feel like I'm not real sure, but what I'm hearing, on different people I follow, and I do a lot of reading up on it. But I hope that they're going to fall a little bit. I don't know that we're going to see anything drastic in 25, but I hope so. I hope it comes down drastically, but I don't think it will. I think it'll drop maybe, but anything is positive as long as they don't go up. And we need one of the things that you probably deal with is the cost of borrowing money from a builder side. So that's a huge concern for me right now. As I work with lots of custom builders, when they go to borrow money, just that the cost to borrow that money, buyers not all understand that, and but it's the builder's business. But we would love to see that kind of fall to where we can get things back a little, arms around things a little more on the building side and being able to borrow, because I feel like so many builders are trying to do things now. In some cases, if they're able to, they're trying to do maybe buy lots in cash and build with their lines or vice versa. So, do you see any of that kind of? What do you see in that kind of realm of the business?
Yeah, and so it definitely so typically from just as some general knowledge, in most cases, when a builder's borrowing, they're borrowing based on a lot of times based on a prime rate, and so. Those are variable rates, and those directly are affected by what the Federal Reserve does. So when the Fed lowers rates, then typically those those builder lines and builder specs and pre-sale financing immediately kind of lower down when the Fed lowers those rates. And whereas a little bit of difference that when the 30-year mortgage rate isn't necessarily directly tied to that. It's more of a long term. A lot of people would say it's more closely tied to like the 10-year Treasury or some of those things. Some of those other markers, though not directly tied to that either. But that it's more of a long term rate. And so definitely if the Fed were to lower rates a little bit more, I know that would help some builders out that are paying prime right now is a little higher than where it has been typical. And so I know there's a lot of builders hoping those rates will come down a little bit and help out in that situation.
Yeah. Well, thank you, Gary.
Yes.
I appreciate your time today.
Appreciate
and Watch us on future episodes of Beyond the Blueprint. We're on multiple platforms, and you can go to triadnewhomeguide.com and you can catch the links to these episodes. Thanks for joining us.